Hi guys, welcome once again to Traders Motivation, and today we're going to discuss why I believe, and a lot of other people believe, that entry/limit orders are the best way to trade the foreign exchange markets. Now, I'm going to show you how I enter trades and where I place my orders. Obviously, other people have different strategies. Other people decide to enter on market orders. That's perfectly fine. But I'm just going to show you the way that I do it, and I welcome discussions in the comments, and I'll quite happily go through why I do what I do, but I'll try and explain it here. So in front of us now, we've got the USD JPY 4-hour candlestick chart. So we can see, just looking at the chart, it's kind of ranging around in the last however long. Just look at the daily. Yeah, it's been ranging since around here. It's not really moving a great deal. So based on that, I'm going to be looking at the chart and I want to be placing a sell trade up around this area here. Because there was some consolidation, price didn't really jump around too much, and then there was a big sell-off. Lovely little sell-off from 11768 area down to 11752, and it sold off all the way down to 11604, which is over 150 pip move. And that's what we're looking for when we're trading. We're looking for the big moves away, big moves down, big moves up. And then what we do, or what I do, is I will then place buy or sell trades around the area that the big sell-off or the big buy-off was from, and then get the reaction from that, because I can guarantee there are a hell of a lot of sell orders that's still up around this price because it was a big sell-off. So to do that, I will place an entry order up around this area, and I will wait, which is the imperative word, and this is what it's all about. It's all about patience, waiting for price to come to you. Don't enter the market gambling, hoping that price will go somewhere that it may possibly not want to go. But from experience, I know that if you place buy or sell orders in areas of big moves away from them, or from those areas, you're guaranteed to get some sort of reaction, and that's where we pick up our pips. So the big consolidation area was around this area, so I'm going to place my sell order right under this wick of this candle here. So I do that on this particular platform by right-clicking, entry sell, and I'm going to place my stop above that area. It may possibly get a lot of buying pressure, and it could smash straight through that area. That's perfectly fine as long as our risk is controlled. That's okay. But I, from experience, know that these areas hold more often than they get slashed through. Where they hold and then drop to, that's another discussion. But I know that you're going to get some selling power from around that price area. So we'll place the stop up here at we'll go just slightly above the area at 11783. So we'll enter that into the order ticket. 31.6 pips away, and we'll control our risk. Say we've got $1,000, we'll risk 2% of $20, so we'll get those 31.6 pips to equal $20, which is 7,500 units. Units are used in the Oanda FX trade platform as opposed to lots, but it's equivalent. It's pretty much the same thing. So we'll enter our order there, and there we go. So we're not going to be trading this currency pair at all. This is really important. We're going to wait. We're going to sit on his hands, and we're going to wait until price comes back up to this area here, and then that will trigger our trade, and then we'll look at it once it's triggered. The reason I trade this way is because psychologically it stops me from gambling, it stops me from seeing things that maybe aren't there, it stops me from wishing and hoping, and this is strictly my trade plan. I trade entry orders or sell or buy orders in areas of consolidation that have had a big sell-off or a big a big bull run from those areas. And that's why I trade entry and limit orders. I'd highly advise everybody to look into this method of trading, particularly for amateurs and those just coming into the currency market. It really does help your psychology. It gives you defined entries. It gives you defined stop losses. Take profits, they're a little bit ambiguous. You could just try and go for a 1-to-1 or a 2-to-1 risk reward ratio. I see what price is doing before I decide to set my take profit figure. But that's just my way of trading. You may want to have defined take profit, and that's perfectly fine. Everybody has a different way of approaching the market. Everybody can make the way that they approach the market work for them. I'm just going through what I do personally. So there we have it. That's an explanation as to how to use an entry order or limit order. Place your order in areas where you believe there will be a reaction. There are other ways of entry. You could perhaps put a buy order there. Once that area has been dealt with, price may go on a bit of a run to the upside. So you may want to place an order up here, a buy trade, smashing through support and resistance. Perfectly fine as well. But yeah, you're waiting until price comes to an area or breaks a psychological barrier before entering the market. Sit on your hands, wait for a price to come to you. Okay, so I hope that video was helpful. A little explanation there as to why I use entry orders. If you have found it useful, please give me a like and a share and a subscribe to my channel. I've got a lot more subjects I wish to talk about, and I'll be going through those through the next couple of months. So yeah, any questions, give me a shout, and have a great day. Goodbye for now.